Well, what do you think about this inflation time that we're in? You probably, at your age, you may not have gone through this before. I went through this with the Carter administration, and of course, it was a very difficult time for investing. But some of the investments rise if you get into them the right time. They rise with the inflation, such as real estate. We know that real estate, like any investment, must be bought at the right time.
Yeah.
And certainly there are a lot of corporations, we've talked about, even New York Stock Exchange firms that are buying real estate, which is one of the reasons that keeps the market tight. And it's that there's a lack of construction, but there's also a lot of corporate purchases for investment purchases, not for mortgages.
Yeah.
So they continue to buy even in this good market. What do you think? Is it going to be real estate, homes, or commercial? Or where do you think that we're headed? Just an opinion is all I'm asking.
Yeah. A professional opinion.
Yep.
Yeah, I don't know who that Carter guy was. The president, you mentioned him. I wasn't.
He goes back to a while.
I wasn't around then. I don't know what you're talking about. I have seen a couple of those cycles, and it is interesting because the mistake people make most of the time is when you're inflation. That's usually the wrong time to try to do something. Right. Usually it should have been a little bit, hopefully it's preventative in your portfolio to begin with. Mm-hmm. I build my portfolio. People ask me, how do you build your portfolio? I build it with inflation in mind. It's going to happen. And so real estate is a great hedge. We do like that. We right. think it's a great thing. The challenge is if today you say, well, all right, I need to do something with it. Your real estate has already risen with that, right. So you're not able to offset that by buying it today. So the best thing to think about is when you're setting up, and this is what we try to help people, because when you're inflation, it's hard to find things that can manage that. And listen, at an 8% inflation rate where we're setting today, really what we want to do at this stage is weather the storm and hope that they get that, and I believe that they will. They'll get the reserve will get that back under control a little bit and manage a little better. We may have a little bit of length of time, but the good things happen from inflation. Inflation will drive the people back into the workforce. We need that. We need people from the sidelines and move back in, and inflation will help do that. Paying $100 at the pump for gas makes you want to get another job. So it does have some good effects with it and things that we need, but don't be reactionary. That's the thing about being in inflation. You don't want to, there's not a lot we can go out and I can say, go grab this. Hopefully that's already in your portfolio because
that's true.
It's a hedge.
If you had bought oil and gas 2 years ago, you would be in great shape today, but you wouldn't be in great shape to buy it today.
That's right.
So you make such a good point. Timing is so important, and no one knows the perfect time. So you study and you continue to invest consistently, and you'll be there when it goes up.
Well, and I say that you're right, and I say that because I've seen so many people, I hate to use the terminology, but they've committed financial suicide really in markets like this because they struggle and then they just dismantle their portfolio many times and selling out and doing things. And that's the most dangerous thing you can do. You've got to hold the course. You've got to stay steady. There's not really something we can say, go buy this or go buy that. Gold's an inflationary hedge. That's good to have in your portfolio. You should have a little bit of it. But hopefully that's already in there. I've told the story of the young man that I talked with who didn't like bonds, and money's in stocks, and you get stocks. And I said, but you've got to have some bonds as an inverse relationship. And he didn't like bonds until, this was many years ago, the market dropped and bonds were very hot. And, well, those who had been in the portfolio prior to, you'd have already had that hedge set in there. So what we really say is you want to build your portfolio with the long haul in mind. And have some of those hedges. Nobody, as we say so often in this business, nobody likes bonds when the market's up and stocks are hot, and nobody likes stocks when bonds are up. So you've got to maintain that discipline through all of this. Stay invested, keep investing. I hope you enjoyed the broadcast today. I hope there are some things that can really help you to get investing or keep investing. That is our desire here. I wanted to make quick mention of helpmeinvest.com. Helpmeinvest.com, an organization that we've put together. There's no fees. There's no products to sell you. It is literally designed to help you invest, to become a better investor. So you can go there, set up an appointment for 30 minutes. We'll spend some time with you. We'll go through your portfolio. We'll help you get started wherever you're at. Helpmeinvest.com. I hope you'll take advantage of it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them and answering them helps us to make sure that we're being relevant and pertinent to you.